Okay, so we're here at the Real Estate Roundtable with IPRG, and we have another guest here today. We have David Chang from Compass.
That's right.
So welcome.
Thank you for having me, guys.
100% happy to have you here.
Super excited to actually do this.
Yeah,
good.
Sure.
Super excited.
So yeah, we've known you for maybe 2 years now.
Uh-huh.
We've done a handful, more than a handful, but we've done a number of deals together.
Mm-hmm.
So that's been a lot of fun. And the goal here is just to talk about like whatever we think, whatever we see that's interesting in the real estate market. So I have a couple ideas of where we could take this, but I'll throw it out to you guys. Is there anything interesting that's come up that you've seen that is worth talking about?
I think we could start it off with David. Obviously, he's doing the luxury market. He's selling condos. He's doing a lot of townhouse sales. Top producer at Compass, which is good. I would like to know how interest rates are affecting the luxury market. I mean, our clients are always asking us that, and you have a good touch on that. We don't. So why don't you start with that?
So it's funny because like I would say the last quarter of 2022 was pretty slow. It was pretty dead. At least for me, I spoke to a lot of my colleagues and they felt the same thing, and everyone's very, very concerned. It could also been maybe like a seasonal thing, but ever since 2023, like maybe like even 3 weeks ago, it's been fire.
We're seeing the same thing.
It's been super, super busy. Rates, I mean, people like talk about like high rates. Rates aren't high. You know, like
Where are you seeing rates?
Right now for like a 10-year ARM, I mean, you're looking at like around 5%. You know,
5.0?
Yeah, like
not high.
it's not high.
I thought it was way higher than that.
No, like I mean, like at one point it was like a little over 6, maybe closer to 7.
When was that?
But like if you have like I would say like the beginning of the fourth quarter, you know,
Okay.
of like 2022.
Yeah.
Like people were just like, oh, high rates, but like, because everyone's just so spoiled and they're just so used to like having rates at like 2 to 4%, you know, since the financial collapse, you know, but like right now it's really not that bad.
So you've seen rates come from the 6s
Yeah.
down to like 5.0 in the past few weeks.
Correct.
So that's a massive drop.
Massive drops.
And
Massive drop.
so activity's really picking up because of that.
Correct.
Yeah.
I mean, we've noticed that for us, the fourth quarter was the worst, and the first month in this year, we were astonished by the level, like the amount of contracts we signed.
Yeah. I also think that like people, are like not just like rate driven, right? They're also kind of, you know, they realize that the worst of the market is behind you, and they're just gaining more confidence and like getting out there and like looking at like more property, you know?
So you think we're through the worst of it?
I think we are.
So if there was like a really good window of opportunity to buy where like the market slowed down and prices really dipped.
Yep.
I don't know if we saw those deals, but I'm sure they were out there.
But there were, look, I think there were neighborhoods where you can, you know, where those deals were. I think overall prices really didn't dip all that much, at least in New York. New York is very, very special. Like even during COVID and that boom, like throughout the country, you know, the townhouse market obviously blew up, but the condo co-op market didn't really explode like everywhere else. And I don't think it's going to have the same like fluctuations downward also, you know? So I think it's a lot more stable and you know, secure.
Yeah, I was telling these guys on one of the previous podcasts, we were talking, so like I live in Park Slope, I have a townhouse in Park Slope, and I track the transfers, obviously for investment sales, but the townhouse transfers come up as well, and I keep seeing transfers in Park Slope, like on townhouses, every single week where I just can't believe how high the prices are. And I'm like, I thought when interest rates went up, the prices would go down. In my head, I thought prices would drop 20%.
No way.
But that wasn't reflected in the comps.
No way. Yeah, the townhouse market, like in Park Slope, really like anywhere kind of like near Park Slope, like the prime neighborhoods, there's literally no inventory. I mean, I'm working with multiple buyers that are like, you know, north of $5 million cash, and there's literally nothing to buy.
Who are these? So obviously, it's
literally
like,
nothing.
It puts us down on earth, right? But like, who are these people? Because we see it all the time, right? Not just in Manhattan, but Brooklyn, $5 million buyers, $6 million buyers. These guys aren't even getting financing.
Yeah.
Who are they? Obviously, without names, like, who are these people with all this money? How do you even?
Finance, a lot of finance people, which is going to be very interesting because like now that a lot of banks and you know are kind of laying people off. Same thing with like tech companies. There's a lot of generational wealth, you know, a lot of generational wealth, like inheritance, exactly, money that's bequeathed from like family members or whatever. You know, there's a lot of that. There's so much money in New York.
It's crazy.
It's it really is crazy. And like New York in these like it really is a bubble, because then you go to like other parts of the country and you like see a house for like $500,000 or $600,000, and like that's not even really a studio in like some areas, you know?
No, it's not.
It's like it's crazy.
It is really crazy.
It really is.
I was just looking at the transfers this week, and remember that house on Garfield that David Slavin is redeveloping?
He got a great deal on that, but yes.
He just
crushed
sold it.
that.
He just sold it for over $8 million.
That's insane. Did he pay 3.5? Right? Didn't he? He paid
I think
like
maybe less.
less.
Yeah.
Wow. Good for him.
Granted, the houses on the
Shout
block
out to him.
look like
Made
they're
a lot of money. Good for him.
100%.
Also,
Yes.
with like townhouses, you know, you can't really build, especially in like Park Slope or like these landmark neighborhoods, right? You can't really build like a 50-unit townhouse like area, right? But in like downtown Brooklyn, you can build like a 475-unit building, which, you know, there's two of them. You know, between two buildings alone, you have almost 1,000 like condo units.
That's a good point.
You know what I mean? And it's very, very different than the townhouse market, and the townhouse market, especially since COVID, has been so popular. Right?
Is there a glut of condo inventory?
There was for a period of time. That's definitely lessening, and there's less condo development, I would say, especially like the big buildings, especially in like the prime neighborhoods where it's like all landmarked, you know, and it's all protected and things like that, you know.
But you're saying townhouses are what people want.
Like a townhouse is the hottest segment of the market.
They're not building any more of them.
It's very hard to. It's very
impossible.
It's impossible,
It's
right?
almost
In a
impossible.
They're pre-warned.
In a landmark neighborhood,
very,
you're not
very
doing
hard
it.
to, you know.
What's
Yeah.
crazy
Townhouses,
is the
so.
level of like I've been in some of these townhouses in Park Slope, in Brooklyn Heights, definitely in the West Village. Like it is insane the level of money these people put into these houses after they buy them. I mean, it's literally insane. These like,
If you want a decent architect and
Yeah.
you do a house like a full gut,
yeah,
to do it like even for $2 million is a very low number, a very, very low number to like do it, you know. And like if you want to hire like an A+ like AD 100 architect, like an Elizabeth Roberts or like Bax Ingwe or something like that, I mean it's at like $3 million plus.
to do a townhouse.
Do a full gut.
And that's
do a full
everything,
gut.
like,
from like
all
from
the
studs,
finishes.
from the studs.
Are these end users? Like,
They're
how
end
many
users.
of these users are buying a townhouse to like just gut it and completely redevelop it and go into like that kind of project, or you know, is there so much more demand to like buy off a developer that already does that work for you?
There's not that many developers that kind of like do the single family houses that kind of like do it. Yes, there are some of them, but the majority of them are like end users.
The end users are
The end
redeveloping
users,
these
like,
properties,
this is gonna be my primary home. Yeah.
and then where do they live while this is going on? Like,
They rent something else. They spend like $14,000-$15,000 a month for a rental somewhere.
they just live somewhere, have this
Yeah.
construction project going on.
Yeah, for like two and a half
Well,
years.
it's crazy. I mean, we've talked about it on other podcasts. I was on for a long time. I lived on West 11th between 5th and 6th.
Yeah.
You can go down that block today. There's 6 houses that are still under construction. They were under construction for years. The one next to me, I mean, I said this before, but the guy that used to own WeWork, Newman,
Yeah.
bought this.
Yeah.
He gutted it. I think he sold it gutted.
Yeah.
This person has it down. I mean, I think they've done a lot of work. It's been 2.5 years. He's not even close to done.
Yeah.
And he checks on it. I see him once every 2 weeks, once every week. Gets in his car. He's all pissed off.
Yeah.
Goes home. It's insane.
Yeah, look, I mean, you know, not everyone can stomach it. I feel like there's this like fantasy, you know, of like people like, I want a townhouse and I want to gut it. But like they have no idea what it really entails to kind of like do it. Because like for 2.5 years, like all you're really doing is just writing checks. Like you're just writing checks, you know? And there's a lot of people that I know that have done that process and they're like, I'm never doing that again. You know?
And it's also the timing, right? Like how long the city would permits and stop work orders, and if you do anything crazy, I mean, I feel like that's a big suck
at
too.
least 2.5 years, especially if it's like in one of the landmark neighborhoods and you have to deal with LPC. You know, it's just another layer, and it's years, man. It's years, and it's a lot of money, especially in the last 2 years with like all inflation and like this, you know, supply chain issues. It's been a real issue.
Yeah, even on the low end of the market, if you buy like a frame townhouse in like South Slope for like under $2 million, and you want to go into a project like that, it's still a heavy lift.
Heavy lift.
And
it's a heavy lift.
I knew this husband and wife that did it, and then You know, like a year later, I heard they were divorced, and like, you know, it's,
Well, did that cause a divorce?
I mean,
It could.
there's reason to
It
believe,
really
man,
could. These are big assumptions.
To gut a townhouse,
Look,
to doing that kind of work,
I
it's,
did
it's
my
a
best.
horrible.
Guys got divorced because they were gutting a house
I
together.
would
They're
have at
done.
least wanted to see the finished product.
I know.
There could have been a shot of work.
Dude, I think
Yeah.
it's a big financial pressure on people
yeah.
to go into.
It's not even that. It's the unknowns. We all
Because,
know developing in
you know,
New
like
York.
it's one thing to talk about like people that are rolling around with like $5 million in cash, but
Yeah.
like that's not the typical buyer of these like $1 to $3 million townhouses.
1 to 3.
I assume.
That is true. That is true.
But they want to go in. These are old houses. They want to
There's
go
not
in and
many-
improve them.
Where in the South Slope are you finding like a $1 million gut? Like there's no chance.
Like under $2 million purchase price.
Yeah.
Some of those wood frame ones are going for
Yeah,
that
but
price.
Wood frame, but
Yeah.
like
I mean, some of those are skinny, like 17 footers or less.
They got no
Like,
girth.
like
they're
two-story.
They're like
There's no girth.
They're like 13, 14 feet. Like I don't think
There's
you get
some, yeah.
Yeah, they're like 13, 14
There's some really
feet.
skinny
Like
ones.
you know.
Can't be, it's the better houses. I mean, it's crazy. I mean, some of these houses in Park Slope are insane.
So
Yeah.
So who are the buyers that are like buying these things? You mentioned there's like very wealthy people rolling
Finance,
around with like a
exactly.
lot like a lot of
Finance.
money, but like what about just like the regular people, like the people that have like
Regular people that regular that have.
They're not living in New York.
They're not living in Brooklyn Heights, Cobble Hill,
Yeah.
Carroll Gardens, Park Slope, Prospect Heights. You know, even if you go further east now, like Fort Greene is becoming a lot more expensive. Clinton Hill is becoming a lot more expensive. You know, it's
Some of these Brooklyn neighborhoods, in my opinion,
Yeah.
whatever, but it's my opinion, they're paying so much to live in these locations, but the infrastructure is just not there. Like you walk around at Clinton Hill, a Bed-Stuy for sure.
yeah.
Like, what are these people doing? Like you spend $3.5 million in Bed-Stuy, there's not a whole lot to do. There's no schools.
Yeah, but if you spend
And then-
$3.5 million in Bed-Stuy, like you probably have a family.
I know, but like,
And the house is done.
I know,
the
but
house is
there's
done.
no
The house-
restaurants. The subways are a little.
That
Dude, you have
eventually.
Serengina's. You know, you have Serengina's right there. I mean,
Sergey's been there forever.
it's been it's a
You're
staple.
also a train ride away from the neighborhoods you want to be in.
Yeah.
I know. but
Those
like,
same houses would be $7 million.
It's just crazy because like for $3.5 million anywhere else, like where I grew up in Fairfield County, Connecticut, $3.5 million, you are a player. You are getting whatever you want,
Yeah.
and here you are like you're just getting in the game.
Yeah.
It's
yeah.
crazy.
But even but like you know the townhouses since COVID have shot up like significantly, right?
Mm-hmm.
Before COVID, they were a lot more manageable,
Got it.
but still expensive. Don't get me wrong, but like a lot more manageable.
So are flippers still getting out of projects right now, in your opinion?
That you know it's tough to find a flipping like
Obviously,
a deal almost.
exactly.
You know, it's really really hard to find.
A lot of
that
things I
deal.
see are bank owned or foreclosed on at this point, but it seems like they're still selling for higher prices than ever. So
Yeah.
the redeveloped properties
Yeah.
that were bought by a developer for cheap.
Yeah, there was a lot of you hear at least nationally, house flipping's done, but it seems like I'm seeing it on a weekly basis in New York.
I think there's
so-
real opportunity for that in Brooklyn.
Well,
Yeah,
there's
that's what I'm
demand.
saying.
There's high demand.
Yeah.
There's no
That's what I'm
product.
saying.
There's I think it's easier to do if you go to like Bed-Stuy, Bed-Stuy, Bushwick,
Heights.
Crown Heights, exactly. You know,
Or if you
those-
get like a
East New
3-family or a
York.
4-family that you
Yep.
convert to like a 1 or a 2. Because I feel like the 3 families and the 4 families, the end users don't really want those. They can't like
It's true.
they can't
It's
envision
true.
what to
It's
do with
true.
it.
It's true.
But you get a developer that goes in there and buys like,
a 2-family with a triplex over a garden.
oh well, they convert it
rental.
to that, yeah. Do an
exactly.
alt 1, convert it,
Exactly,
make
correct.
it really.
Is that the most ideal layout that you see?
Yeah, for like that kind of like opens you up to like the biggest audience of buyers. I would say is like a triplex over a garden unit.
yeah,
Yeah.
I could definitely.
That's
see
what
that.
I would want.
Yeah,
That
for
makes
sure.
the most sense.
100%.
Makes sense.
100%. That's the ideal layout.
That's what I would want too. You know.
Yeah, because then in your triplex, like the main level is the parlor floor, so you have all the kitchen and the
Yep.
living room there, and then you have 2 floors of bedrooms.
Yep.
A lot of space.
Yep.
Get some cash flow from the ground floor.
If that's what you want, you could even put a kitchenette, like a little kitchenette downstairs. So like you could even use it as a single family if you really wanted to use it as a
Yeah.
single family. You know.
For sure.
Yeah. Have a deck out the back and just make sure that the owner's triplex still gets the garden.
Yeah.
So.
So are you seeing like a lot of first-time buyers? Is like all these young families in their 30s? Are they like that were renting for the longest time? Are they the ones like now pulling the trigger and buying places?
It's a mix. It
Yeah.
really is a mix. I know
Okay.
there's definitely a lot less international people, but it's really really a mix. It's I've been seeing the average and the mean age kind of like skew higher, obviously, but I think that's natural when you're going to find higher price points.
Yeah.
You know.
And so these buyers that are looking to buy, like let's just say in Brooklyn, do they already live in Brooklyn, or they own in Brooklyn, or are these people coming from Manhattan that are now like
a lot of Manhattanites.
It's
a
Manhattanites.
A lot of Manhattanites. But yes, I mean, obviously you're going to get both,
Yeah.
right? But I'm seeing a lot of Manhattanites.
Where in Manhattan are they coming from? Everywhere?
I see a lot of Chelsea people.
Okay.
A lot of Chelsea, a lot of Tribeca, a lot of like the West Village, and a lot on the Upper East Side.
So these Manhattanites are coming to Brooklyn.
To Brooklyn.
Why are they coming to Brooklyn?
More space.
More space, lower prices?
More
Or-
space, lower prices, depending on the neighborhood.
Okay.
On the neighborhood.
Okay.
And they have a lot of friends that live in Brooklyn, and they want to be closer to their friends.
And what about like the Manhattanites moving out to Long Island or Westchester or New Jersey? I mean, I'm not sure if you see any of that.
Yeah, I mean, I definitely see it. They're kind of like, they usually have families. They usually have multiple kids, not just one kid. They usually have like probably 2 or 3 kids, and they can get like, a 4,000 square foot house, in Connecticut, Jersey, or Long Island. And what, like, their money is not going to take them as far, like in the city or the school districts and things like that. So those are all taken, like, into consideration.
I have a question about the rentals too, because I know you and I talked before this.
Yeah.
You said you have like 90 to 100 rentals in the market right now.
Yep.
Everyone talks about in Brooklyn and in New York or Manhattan how in 21 the rental market was just so inflated. Do you see it coming down? Because you have rentals probably like every territory with what you're doing.
Rentals in 2022 were like, I've never seen rentals explode like that. Like,
I mean, let's just put this into perspective. We are in February of 2023 right now.
For sure. So it was very inflated.
Rentals
summer.
are definitely seasonal. So we're at like potentially the slowest point in the rental season.
But do you agree that 2022 summer was like?
I feel like all of 2023 rentals was like ridiculous.
That's what I feel like.
It was like ridiculous to the point where you literally don't have to do anything. All you have to do is just list it, and then literally you'll have like 1,000 people come and like, bid it up or whatever. It got to the point where like the prices I think got so stupid that like they're like, there's no way I'm moving. It's also a little tricky because like last year a lot of people got their leases like during COVID.
Yeah.
So they had these COVID leases that were like really, really low, and then you had like once all that the rental market started to come back, these landlords are like, I'm raising your rent by like 40%. You know what I mean?
Easily.
Or something like that. And like everyone's just like, screw this, and like everyone's starting to realize, and everyone's out in the same time looking at rentals, and that just sort of like added to the fiery mix.
You have in every neighborhood, I would say, right? You have rentals in Bushwick, Bed-Stuy, Williamsburg, Greenpoint, Crown Heights.
Mostly Brooklyn. Yeah, mostly Brooklyn.
So in these areas, these more tertiary locations, are you seeing things come down, or are you seeing things stay over?
Yes, I'm definitely seeing traffic and like pricing come down, more concessions, 1 month free, 1.5 months free, but again, like it is seasonal, but it's also kind of like these prices are so crazy that they'll probably just like suck it up and live where they're going to live right now, and like if they don't have to expand right now, that they won't. So it's going to be interesting, I think, to see what the spring and summer markets are going to be like.
I know we saw a point where people were running away from roommates. Do you see that coming back, where people are now getting 3-4 bedrooms, and that's the only way they can afford?
That's always been pretty like popular, and it's been a lot more popular as rents have increased, significantly. That's also more common in neighborhoods like Bushwick and Bed-Stuy, where the average age is a lot younger. So yeah, I mean that's still a very, very popular thing.
Okay.
Yeah.
All right. So if rentals are coming down, what's causing the rentals to come down?
There is more inventory.
Okay.
I think it's just a perception. Again, like I said before, I think a lot of it is like, a lot of tenants are like deciding not to move if they don't have to. They'll suck it up for like another like year or two in their current space because they realize like what they're getting is just even less than what they're probably paying.
Got it. But if they're not moving, then there's less available units on the market, right? And the inventory is slowing down significantly. There's not a whole lot of, like, we deal with a lot of these developers, and they don't have the projects going on. They don't have the rent stabilized buildings, or they're getting vacant apartments and renovating. So I have real concerns about just the amount of supply in the market. And I personally think if we are seeing any dip in the rents right now, I think it's purely seasonal, and I
can see that.
I'm nervous for the summer for these free market tenants. I think it's going to be another summer of like
gangbusters?
Look, we're not going to
I
see
hope
the
that's
rent.
case. I hope- Sorry.
I don't think rents are going to go up.
I hope you're right.
I don't think they're
But
going to go
we'll
up
see.
10% from May to June, and then another 10%
yeah.
before July, and another 10%. Like last summer.
Yeah.
But man, I just don't know where these people are going to live. If they want to stay in New York, there's just not enough units, and they're just getting squeezed in
They are
terms
getting
of.
squeezed. I mean, even like the prime areas of Brooklyn, like in Boerum Hill, even. I mean, like 2 beds are almost going for like $7,500, $8,000 a month. It's a lot of money.
But there's nothing out there for rent, and
Yeah.
it's just going to make it that much tougher. I think come the
Manhattan
spring
is
seasons.
definitely. I look in Manhattan all
Really?
the time, and there's just nothing for rent.
Yeah.
And the prices are even crazier now than they were when I was looking in the winter.
Yeah.
I will say the tertiary markets though, there is more rental inventory. On
You're
the
telling me
market.
like in Bed-Stuy, right?
I mean, there was a time during summer last year.
Yeah.
You'd even like Bed-Stuy, for example, there was like 10 rentals. Now there's
a
over
lot. Now there's a
200.
lot. Now there's a lot of rentals.
Yeah,
That's not.
like
Really?
that's the difference. So like certain areas.
Probably from my client.
Yeah, exactly. Your client, the one that shall not be named.
Probably. But yes.
Those are some great units though.
The
Yeah.
Bed-Stuy Bushwick markets, like inventory is definitely starting to creep up.
Got it.
Yeah,
You guys
for
have a
sure.
good feel for that.
Yeah.
For sure.
Getting back to the condos and the townhouses.
Yeah.
So, are people getting financing to buy these houses? What kind of financing are people getting?
They're getting, yes, they are getting financing. The majority of people are getting financing, even though there's a lot of people that are like also cash. But I also feel like the people that are paying cash want like a discount because they know rates are high.
Okay.
Rightfully so, though. It makes sense they would want one.
Yeah, but like, look, if someone did, like finances, but they just waive their financing contingency, like, what's the difference?
There's no difference. I agree with that.
There's just no difference, right? And like, you fine, you have
it's
to
the
wait.
same. Yeah.
Fine, you have to wait another 30 days, but who cares? You know what I mean? Like, you know, if I can get another like $50,000 to $100,000, like, I'll stay another. You know, but like, you know, it varies on the product that you're kind of getting. There's a lot of people that like are fixed on getting these 30-year fixes for like these like 1 and 2 bedrooms. I'm like, why would you get a 30-year fix
100%.
on like a 1 or a 2 bedroom, or even like a smaller 3 bedroom? Like, you know, sometimes in like downtown Brooklyn area, you have these 3 bedrooms that are 1,500 square feet, and they get like 30-year fixes. I'm like, you're not gonna be here for 30 years.
Mm-hmm.
Why would you get it? You know. And sometimes it's tough for me as a broker to kind of explain that because they're like, oh, like you just want me to pay more for this, and like it's really not the case.
So what do
know?
you think they should be getting?
I feel like I really like the IO product. Like, you know, like if you qualify for it, like a 10-year IO or a 10-1 ARM, I think those are like the best products out
Are
there.
people getting the 10-year IOs frequently?
They're not getting them frequently.
Do
Because
they know about them?
I explain it to them. I ask them to speak to like mortgage bankers about it. I think those are the best products. You can still pay it down whenever you want. You
Of
know what I
course,
mean?
you could amortize it.
Yeah, you can amortize. You can pay it down whenever you want. If you have a bad year at your job or whatever, you know, then like you don't have to do anything, right? But you're paying it down at your own leisure, at your own timeline, and not the bank's. You know.
So you're basically the IO product. You're essentially like renting practically. I mean, you're not amortizing the debt.
And it drops your monthly payment like significantly.
Oh, yeah.
Like 30 to 40%, I would say. Like
My
30%,
guess
I would
is
say.
no one has any idea.
No one has.
I think it goes back to the same old, you know, I have to own a home thing. It's like
Okay,
I have to get,
I
I have
wanna
to get a
talk
third.
about this,
I have
yeah.
to get a 30-year fix.
Yeah,
I
exactly.
mean,
But,
that's old school guy. Like, I asked my
Because
father-in-law about it. He
because
was
again,
like, I would never
they
not
go,
pay
well,
down
what
my...
if what if in 10 years I don't have my equity? Well, you
Yeah, but
bought a
if you-
bad house, but you've paid cheap along those 10 years for IO.
But also, like, if you look at the amortization schedule on a 30-year fix, like the first like 15 years anyway is almost all interest.
all interest.
It's all interest. So you're doing an IO anyway, so you're just like increasing your monthly payments. Like, it makes no sense to me.
Okay, so people are showing up and getting loans, but they want to amortize the loans. They want fully
Yeah.
amortizing, which
Yep.
is very expensive. You're talking about
Very
mortgage
expensive.
payments in most
Huge.
cases over $10,000 a month.
Yeah. Yeah.
10, 15,000 a month to amortize these $1 million plus mortgages.
Yeah. I mean,
Not-
it makes it significantly less like attainable.
Yeah, 100%.
You know?
It's
Yeah,
very
yeah.
difficult to have
For sure.
that much debt service.
For sure. I agree.
What are your thoughts on what Steve just said, where he's like, you know, I think people are choosing to amortize the loans because they fall into the same thing of like, I have to own a home, like this whole American dream of like, you know, all these young families just want to buy a place to live. They want to own a home.
Yeah.
And I feel like in our culture, there's a whole, you know, this whole idea that you know the American dream. You have to own a home. You're gonna. That's like what you strive for.
But you could still own the home and take out an IO. You could still, but you could pay down your monthly payment from your bank whenever you want to.
From their perspective, it's riskier.
But why is it?
Let me take a step back.
It's not a risk.
But that's how they feel.
In
If
this
it balloons,
office,
it's risky.
That's how they feel, though.
we have close to 40 people working in this office, and I'd say less than 5 own a home or own a condo. Less than 5 people in this office. So most of the people in this office, mostly millennials, are renters in New York City. Many people in this office have pushed back against the idea of home ownership. They think it costs a lot of money. You have to have to put down the 20 or 25 or 30% is a lot. And a lot of them have thought like they're just better off taking the money and investing in other asset classes, whether it's real estate for passive income and appreciation or something they understand better, or they just didn't want to bet on the housing market to like buy a home.
Yeah, look, I mean, both has its pros and cons to it, and I understand both sides of it. Yeah, I mean, I for me, it's when I'm buying a home, I'm looking at it as not only like as an investment. If I make money on it, great, but it's also a place where I can plant roots, and I have a family, and it's like I want to give the security to my daughter. I don't want to have to like move every 5 years, like like my landlord wants to sell it now. All right, I gotta move. Like I want something that I can call mine and where I can like raise my family.
100%.
That's what it comes down to me. It's not just like, okay, like this is an investment and I need to make 20% on my money. Like I'm not looking at it like that.
Yeah, I agree with that.
So again, it's like my home, right? Like it's something that I can like rely on. It's my it's like my oasis, coming home from like work.
I have one more question on residential real estate, and then we can potentially move on, unless you guys have more that you want to discuss. But my question is, when you go to these houses, you go for a listing appointment to a condo or a townhouse or whatever it is.
Like a pitch kind of thing?
Yeah, call it a pitch.
Pitch.
Call it a pitch. And maybe there's a second question to follow, but how do you value this residential real estate? Like, how do you come up with a price? Like, someone says, hey, David, come to my townhouse. Tell me what this thing is worth. Is it all, like, based on comps and price per foot, or is it based on, like, where the interest rates are and affordability, and basically be like, I think the market's at $10,000 a month for debt service, and that gives you X amount of debt, and then you put your 20% of equity on top of that, so values will be around here. Like, how do you value these properties?
That's a good question. I think it's all of the above.
Okay.
The debt service, I usually don't take into consideration, but I think it's everything else. Obviously, like you have to look at comps, right? I think pricing out condos is very different than pricing out like a townhouse, right? Like townhouses are so like different, like the condition of the house is so important, and the level of finishes and things like that. But like in a condo, if it's built in the last 10 years, like everything in that particular line is going to be virtually like the same. You know what I mean? So like not that much is going to change. So it's a lot easier, in my opinion, to price out a condo than it is like a townhouse.
For sure.
Okay.
There's so many comps to look at condos. You can look at
There's so many.
Yeah,
exactly.
When these properties sell, when they go under contract, is that public information? Like, do you have a sense if it went over the ask, under the ask?
When you're in contract, there's
like
there's
the
no
real
way
the
you
real
can
deal's
tell.
all constantly reporting like this was the most expensive listing to go under contract in the previous week.
they're probably referring to the listing price.
Well, they're talking.
assuming.
Well, they see the listing price, and then they see it was removed on Street Easy, and it's now shown as under contract. So I'm just wondering, like, how to gauge where the real market is.
I think it's an
in
assumption.
terms of where deals are getting done, or you're looking back
When
3
it's-
months.
when it's in
transfers.
contract.
Yeah.
In contract, there's no way to tell.
You gotta speak to the deal makers, whoever's selling it.
You gotta like make the phone call or whatever. Yeah.
A couple more questions that came up as we were talking about this
All right.
on residential real estate. So, what about these condos where there's a 421A? Maybe it was
That's a good question.
built like
Yeah.
15 years ago. Do you ever come across these? I'll explain my thinking behind it if you want. But
Yeah, I mean, I'm living in one right now where there was a 15-year abatement. Like in Brooklyn, like.
so your condo that you have has an abatement.
That has. I mean, I would say the last 2 condos that I've lived in both had abatements in them.
And you're still in the abatement period?
The other one, my first apartment where my mother-in-law lives in, the abatement expired.
Okay.
And my second one, it expires this summer.
Fully expired or it's phasing out?
Fully expired. So it's already phased out the last 5 years
got
already.
it.
Yeah.
So that means the real estate tax bill becomes pretty significant on these units.
It jumps, yeah. It jumps, but like it's weird because if you look at a new construction condo, if you go to like year 2, the taxes on a new construction condo is still more than an older building where the tax abatement expired.
Oh, interesting.
Yeah.
So
I don't know why that's the case.
What are the approximate taxes on an unabated condo unit?
The taxes, I'm not. So like I usually look at the common charges and the taxes together.
Okay.
Like in Brooklyn, you're around $2 a foot, right? You're around $2 a foot. The more expensive ones are closer to $3 a foot.
What does that come out to? Like, how big are these units? Like 1,500 square feet? Is that too big?
I'll tell you this.
It's probably like $3,500 a month combined for a place that's roughly like $2 million, I think.
It's a lot.
Like one wall, which is right over here, the common charges in there are massive. I don't know why. I mean, HOA can be huge.
In Manhattan, the common charges and taxes are like significantly more.
Yeah.
Like if you're closer to $3 a foot, that's relatively like fine.
Yeah.
But if it was like $3 a foot in like Brooklyn, like this is fucking crazy. You know what I mean? Like and I'm not really sure why, because like the labor is still relatively the same. The energy costs and things like that. So it's I'm not really sure.
Amenities, maybe? I have no idea. Taxes are probably a big thing. Taxes in Brooklyn are much lower than.
Oh, yeah.
What's crazy though is that the taxes for a townhouse versus the taxes on like in a condo is so not fair. You can have like real estate tax, and that's one of the reasons why the townhouse market like exploded. Like you could get a $5 million townhouse and have the same taxes as like a $2 million condo.
Yes.
Or less.
Or less, which is insane.
Hey.
Like no common charge.
Less taxes.
So all your money is going to the equity of the house as opposed to just like higher monthlies.
I always made a joke. My first condo out of school was in Hoboken. 2-bedroom. It was like 650 square feet. My taxes were $7,500. More than $1 million homes here in Brooklyn or New York. It's insane.
Yeah, like that boggles my mind, and that makes no sense to me. That makes no sense to me.
I was running numbers on a 421A building recently, the condo building, just out of curiosity, and it seemed to me like these people were paying like $1,000 a year for taxes, and on my underwriting, it looked like the taxes on these condo units were going to jump to like $17,000 a year. So I kind of felt, and I don't know if that was true or not, but that was just me looking at the notice of property value, doing some math, but it made me feel bad for these condo buyers that bought into like the 421A buildings, which was advertised as like, this is a benefit. You get the tax break or whatever. And really, I felt like they were getting into a situation where they didn't realize the tax exposure that they had down the road.
And they definitely, obviously David knows, but like most people don't realize that. If you're like not
How
in the real
could you?
estate, you would never know.
It took me
For
so
this story
long.
so many
It
times.
took me so long to figure out how to calculate the actual taxes based on the notice of property value and the exemption value.
You have access to this information.
Yeah, but you might
sure.
you might not know, but I would hope you are somewhat inclined to just ask.
I don't
what
think
is
they
my
do.
potential
I don't think
exposure?
these attorneys.
My
I don't-
sister had a friend that owned a condo in Bed-Stuy, and she bought it for like whatever $500,000, and it was abated. She had no idea, no idea.
Even for the new construction buildings, so like all these offering plans and these buildings, like they advertise these taxes for like year one taxes, and these year one taxes are like not the full tax amount, right? But like most buyers don't know about this, and then in year 2, right? Like I sold an entire building once, like the taxes were like, oh yeah, it's fine. Like year 2, it jumped 45%. Like that's a pretty big.
Do these people end up calling you and being
They're
like,
like-
"Hey, what happened here?"
No, I mean, like, that's not my fault. I'm like, it's the city's fault. But it's like that with like almost every like building. Like these taxes jump so much, and then they, spend extra money, get like the right attorneys and like fight the city about it, and it's like a lot of people do not know about it.
Yeah.
Yeah.
This is my last question on residential,
Okay.
but like you see like Ryan Serhant on Instagram, like doing all the social media stuff, and then I see all these other residential brokers. I get flyers in the mail from some people, not a lot of people, but I do get flyers in the mail. Like we work in investment sales, so I know how we go about getting our listing leads and getting our exclusive inventory. But in the residential world, it's like any and everyone could be a client. I mean, we focus on the sales side, so we focus on exclusive representation as sellers. But how do you go about getting listing leads in residential real estate?
Most of my listings are referrals. friends of friends, like, people that I've, done good by in the past. A lot of that is that, or like I've sold a building in the past, like I represented the sponsor. And so I know the building inside and out. And so a lot of those owners kind of like come back to me and like do it. But yeah, I mean, social media has definitely been playing a much, much larger role, like in the prospecting of getting new business. Mailers, have always been kind of, a way to like, mail huge condos and like townhouses.
Yeah.
Networking, it's like the way I see it is that we're yes, we are in the real estate game, but we're also in the lead generation business. Right, we are
100%.
We are in the lead generation business.
100%, yeah.
And like, it's really about kind of like spreading your tentacles out there and just making sure. And I think Ryan, as you said, has done like he's probably doing the best job of doing that.
Yeah, I don't know how much that translates to people contacting him to hire him exclusively, but the brand is.
We also had a leg up with a TV show helps.
Bravo has definitely catapulted him into like another stratosphere. But.
Okay, so you mentioned that you had like sponsors where you like sold out a building, and I think that some of those have led to some other pretty good opportunities as well. Yeah. But how do you get in with some like developer that's like selling out a condo building?
Just having like a really good book of business, and they see you kind of like doing a lot in the neighborhood, and they kind of just like call you, and they call you, and before they even build the building, they consult with you, and they want to understand like who the buyer profile is, where pricing is, where you kind of like see it.
Got it.
And you act as a consultant at first,
yeah,
and then they buy the property and they take you on and the pre-development phase, and it was probably 2 years of pre-development before you actually sell any of the condos. It's a process.
Yeah,
it really, really is.
And landing an opportunity like that is like the best that you can get in the residential space.
I would say with a lot of brokers, I would say like that's like the ultimate.
Yeah.
Wait, selling out a building?
Getting hired to sell out a building.
Yeah. Getting
that's what I would think.
A building, but like, look, it's a lot more work than what brokers think it is. Mm-hmm. It's a lot more work,
Really?
Because you can be a part of this project for 2 or 3 years in the pre-development phase. The market switches, and then you get fired and you don't get paid at all, and so
sure.
So it's a lot of work for with a delayed payment structure.
Yeah, I mean, we see some of the guys in your space. I mean, we sell a lot of these smaller buildings, 25 footers or 20 footers, 2 to 5 unit buildings that these developers are going in, and they're making luxury condos. And
yeah, I was talking more about
I was too.
Yeah, got it. Like kind of like the bigger
for sure
200 unit buildings.
That's what I was referring to as well.
A lot more risky.
Yeah.
Yeah.
But we also see it on a very small scale as well.
For sure.
Where these guys are getting brought in. Anything else to go over for residential?
I mean, I'd like to talk a little bit about, not so much about residential, more commercial, but obviously, David, we all do a lot of business with you in this office. And you have a special client that we do a lot of business with, and it's interesting to see, the finished product business. I mean, that's been very good for our office. I know a lot of other brokers are doing that as well. I want to know your opinion, if you think there's going to be other buyers like your client that's going to be buying this type of product, because it seems like it's just them for the most part buying all this stuff, but I think there's a lot of validity to the business plan. And I'm wondering if you think there's going to be other people to step in and start buying this product.
I think there's been a lot of institutional buyers that have come in and done a lot. I would say the last couple of years.
But there's a difference. Buying the smaller stuff is unique.
Oh, 100%.
That's unique.
Yeah, that's definitely 100% unique. But again, I've seen more institutional money kind of, take a similar approach.
Okay.
I think it was a lot harder with kind of the rates and all that kind of stuff.
For sure.
A lot harder. So I think a lot of that has died down. But in terms of overall, I like the model long term.
So do I. I mean, I think a lot of these big funds, they buy one building for $500 million, so all their money's invested in this one building.
Yep.
They have exposure,
Yep.
and if you can group together a bunch of $5, $6, $7 million deals that are 10 units and under, and you buy hundreds of them, I think you can sell it to one of these big institutions as a package, and it also diversifies them across several markets, and they have lower tax exposures, and it makes a ton of sense. I like what this buyer in particular is doing, and I'm waiting to see other people do the same thing. And it'd be good for us, obviously. I mean, this is the stuff that we sell, and we can connect those dots really easily. So it's interesting to say.
I
All right. So how much time do we have left? It's already after 3. You have to run in a few minutes.
Yeah, I gotta leave in like 5 minutes.
All right, cool. I'm just trying to think if there's anything else that we should touch on before you head out of here.
I'm just one thing that came to mind is with rates stabilizing now, do you see pricing for these new development sites or new development projects getting more aggressive or staying pretty much where they are today going throughout 2023?
I think a developer will always try to push pricing.
Yeah.
Right, like
Always.
regardless of the market, like if rates were like
That
at
could be
90%,
true.
like they are 100% going to try to push pricing.
We haven't seen a slowdown though with development sites. It's our best listing right now, I think. Development sites.
Development sites.
Oh.
Yeah.
But I don't know if it's like the 2-year or 3-year horizon on actually getting the job done.
Yep.
That's been our best.
I think that's definitely it. I think a lot of developers are starting to see the light at the end of the tunnel, that the market's kind of like behind you, and this is the time to kind of like invest.
I think there's buyers for it now.
Yeah.
5 years ago, if a developer came to me to sell a new construction building, you almost had crickets.
Yeah.
There was no value add. No one wanted to buy it. There was no rental market the way you're seeing it today. So I think developers are eager to get the shovel back in the ground and start building
I mean,
projects.
if I had to pick the 2 best things, we listed one today, a vacant townhouse that's going to be kind of redevelopment or a piece of dirt in a good location. Those 2 things, I think, that is the listing to get for us today. And that's all condo development for us, really.
Yeah, it's very interesting. It's all geared towards the end market, which we talked about previously, which is all based on incredibly attractive financing options for homeowners.
Yeah, for sure.
With IO, what kind of LTV are we seeing? 80%? Is that where it's maxing out, or are we seeing stuff go beyond that?
I'm seeing a lot of people still do like 80% financing.
80%, yeah.
80% financing, which is it's pretty weak. It's pretty weak if you're the buyer.
You think 80% is weak?
80%.
Weak financing?
Well, like
It's heavy, I think.
if you're the seller, and you're doing like 80% financing and you want a finance contingency, you know what I mean?
You don't want to give it.
I don't. That's I would want some sort of buffer where like, fine, if you want to do 80% financing, that's okay, but like it's going to be contingent on like like a lower
Contingent
number.
on what, 75 or 70?
75. Like anything is better than 80.
I
Right?
always
It's
thought
hard to make a deal. Like,
I always thought
you,
80 was heavy.
can't give someone a
no,
contingency
we're talking
at
about the
8%.
contingency. If you're
But, like,
selling
a
a
lot
deal,
of
it's
people
hard.
do. A lot of people
'Cause
do.
it is a big loan.
Especially
Huge
like
loan.
like the entry level buyer who's buying a 1-bedroom in Brooklyn. A lot of them are going to be doing like 80% finance.
And they want a contingency.
They need to,
And it's not even them,
they
it's-
want a finance contingency. So like yeah, you have this like good price, but then like the appraisal comes back and it's $1 short. You're like, you know what, I'm going to walk away.
Yeah.
And you're like,
the
does that
appraisal's
happen?
the killer.
the appraisal is 100% the goal.
Yeah, it's not your decision.
Yeah, and like you can get like these appraisers don't know what they're doing. They don't know how to price
They
it.
don't.
They really don't. You can get 10 appraisers
The
and get 10
comps?
different
I still don't get
numbers.
how it's a profession. It
I
doesn't
get
make
it,
sense.
It's literally a guessing
like,
game.
Yeah.
The comps they use in the appraisals are like
Make
wacky.
no sense. Like these appraisers like live somewhere else.
They live
You
in
know
Long
what I mean?
Island.
They
live
fly
Long
them in.
Island.
They get like
Yeah.
input.
Yeah, and like they just don't. That's the most frustrating thing, And to actually appeal an appraisal is so and like win.
Yeah, you're not doing it.
It's so hard.
The
it's
banks,
impossible.
the banks think the appraisals are like just absolutely the truth.
Yeah, they really do.
So what percentage of deals are getting done with financing contingencies?
Now it's still it's still the majority.
Yeah, 'cause
Really?
we
It's still
we
the
don't give any
majority.
contingencies in our sales.
At least in Brooklyn.
Why would you
At
do
least
that, though?
At least in Brooklyn.
For home,
These
'Cause
guys,
the sellers-
can't-
the
they're not
sellers are willing-
stacking
they
up
want a
and
bigger
just.
price.
No,
They
I know,
just-
but like even buying like New York, that does
Yeah, but
not
like, if
for us.
you-
It does not fly. Like I
No,
will
it
never
doesn't
go
fly.
with a contingent deal. I don't want to deal with it unless.
It's an investment.
Oh, dude, we might sell like we
The
sold
majority.
78 buildings last year. Maybe one was a content.
But I think it's
Not contingent on financing. Maybe it was contingent on environmental or something like that.
But do you think you even did one
I don't think
financing contingency deal?
I don't
last
think
year?
I've done a financing contingency deal in my career.
No, we
What?
have. We have.
That's-
We can count on one hand. We definitely have. Like 204 Park. I remember when we were like at years
Seriously?
ago.
There was a
Dude,
financing contingency
Dude, we
there?
also got a stupid number.
All right, well, don't say that too loud.
Yeah, no. Well, you got, yeah, I know. Well,
the world knows.
yeah, now they know. But like,
Hey, they still made money
But that's
there.
the investment space. That's like the
Yeah, it's
investment
different.
space. It's very, very, very different than the residential space. Very, very different.
but why though? It's so in such high demand. Like if I came to the table trying to buy a townhome in Carroll Gardens, and I said, "Oh, I'm here, but I have an 80% finance contingency. I'm gonna get blown
the
out." The
person without it is gonna win. But
no, I would be like, I would go talk to my bank, be like, "Hey, this is how much cash I have. Can I get this loan? I'll go hard."
Or you can waive it.
Yeah, I'll waive my contingency
and do
try to
that,
get a
and
deal.
it makes you look a lot stronger. And then you still go
What
and
about
get the
getting
financing.
pre-approved? I thought pre-approved is a big
but
thing.
also, but the pre-approval means nothing. It doesn't work. Like it's not worth the paper that it's printed on.
Really?
It's not worth the paper that it's printed
Gotta
on.
have the relationship.
It's only a superficial dive into like your finances,
Yeah.
right?
Yeah.
Especially in the condo world, like a bank lends not only on your financial profile, but also like the building itself, and there's a lot of condos have litigation in it, or there's like, the sponsor owns more than 10% of the building. There's like little different things where like, the bank may not just give you the money, and you just don't know.
Yeah, but to be competitive, I would think you wanted to get that waived. It's not a very competitive offer to be like contingent on
Look,
finance.
I mean, the higher the price point,
Yeah.
the less, I would say contingent deals there are.
Gotcha.
But like if you're still looking at, between $1 and $3 million, the majority of it is contingent on financing.
Wow. Yeah, I didn't know that. I learned something because I honestly didn't think that. In New York. Obviously, in other parts of the
that's my
country.
market.
So how do we'll let you run in a second here, but how does the seller decide which buyer to go with? Like if you have a competitive situation and you have these buyers at the table, some may have financing contingencies, some may not.
Yep.
Does it all come down to like who's offering the most? And I feel like
It comes down to like price and terms. Price is number one.
I feel like if you're leveraging 80%, like who cares if you offer another 25 grand like to get the house?
I mean, like who cares? Like why would you take that deal
No, why? Like as a buyer,
as a buyer?
like if you feel like it's a competitive situation and it all comes down to price and you can
Yeah.
get your financing contingency or whatever, you come up with another 25 grand in the purchase price.
Yeah.
It's like not a whole lot of money out of pocket.
Yeah.
And then especially if you have like IO, like it's not going to move the needle much on the
Right.
cost of debt service.
Right.
So
I think it depends on the price of the apartment, right? Like, if I were, if it was like a $3 million place and there was someone that was financing, but it was not contingent on financing, but someone offered like $25,000 more and it was contingent and they were like, financing 80%, I would still take the lower amount.
So would I.
100%. I would still take the lower amount, and like that's a solid deal. Because then if you go through the process with that other person, you go into contract, and then 3 weeks later the appraisal happens, and then you're kind of like waiting, you're in contract, and you gotta like, he's like, I changed my mind. It came in like low. You have to start the process all over again. You lose your momentum. It's a process.
Yeah.
and you ask these buyers for all sorts of information on like their credit and their income.
Yeah,
and their,
have them fill out
and
like a
their
revenue
assets.
financial form, like a balance
Yeah.
sheet, all that stuff. Yeah,
Got it.
Exactly.
At least you do that. That's some. You at least have an idea before you go into it.
Yeah. I'm not going there blindly with it. Yeah, for sure.
How do you calculate if someone can afford a mortgage? It's the debt to income ratio.
The debt to
Are you
income
trying to like
ratio.
back into that?
Yeah, the debt to income ratio, especially with co-ops in the city,
Co-ops are hard.
Are like very, very hard. Usually, debt to income ratios for the co-ops are anywhere between like 19% to like 28%. 28% is pretty high.
I hear banks are doing stuff in the 40s now.
I'm not sure about that.
I saw an ad in the Real Deal this week
Really?
where the guy was basically advertising 43%, and I spoke with my mortgage guy this week, and he said he's seen a lot of like 43% type of stuff,
Oh wow.
which basically
That's pretty
means
high.
it's extremely high.
That's pretty high. Yeah.
All right, so
good luck to that person.
anything else that we should go over?
I think you guys covered it, man.
Okay,
You
good.
guys covered it.
Amazing.
I really, really do.
Some good insight into
Yeah,
into
we'll get
the
a
world.
I'm glad you guys
There
had
might be a part two.
What's up?
Yeah.
I like saw this on social and I've seen it around, like and I'm like, dude, this is a cool podcast, and I'm glad you guys
Appreciate
asked me
it.
to do it, man.
Part of the crew.
Definitely.
Yeah, for sure.
Definitely.
For sure, man.
We
All right,
appreciate you
Dave.
doing
Well, thank you very much.
Thank you guys.
Thanks for coming on.
All right.
Yep, thank you. All right, everyone. Until next time.